What's up, traders? Anthony Crudele here, and welcome to this week's episode of Develop Your Edge. In today's show, I'm going to talk about how I use market reactions as an edge. And in my final thoughts, I'm going to address some questions that I got from some tweets that I put out this week. So let's just start off by going right to the charts. All right, I pulled up an E-Mini S&P daily here on Tradestation. Now, I've been talking about this a lot over the past couple of weeks. First, I want to do a quick recap so you know where I am with my thinking. I think it's always so important when a trader shows you something that you want to know how they think instead of them telling you what to think. So how I think is when Bollinger Bands are going up and the market's moving up and we see the Bollinger Bands opening like a mouth, as I've said many times on the show, to me, that's a one-way market. When the markets start to consolidate and you start to see the Bollinger Bands come back in, that's when my indicators are drawn, which you could download for free at anthonycrudele.com. I look to see these levels, and this is my 30% level, which I talk a lot about, and that price has been 3154, and my 50% level is 3006. So those become my support and resistance levels on a daily. To me, what's important is the reactions to those levels more so than the levels themselves. What do I mean by that? Well, initially, as you could see, when my indicator drew the levels, the market cranked down to the 50% level, got below it, some multiple closes below 3006, and then it started to get back above it. And at the time, when it was trading around here, not really respecting my level. And what's so important to me is how the market respects my level or doesn't care about it, because everybody has levels. Everything works sometimes, but it's about really us taking the information, the response that the market's giving us, and letting us know if our levels are working well or not. In this particular area, it wasn't working so well. And I'm actually going to talk a little bit later about how HYG really prevented me from being too bearish in here. I've talked about this in previous episodes as well, but just for this level itself was not a great reaction. But when it started to close back above it, it indicated that would go and test the pink level, which it did. And then you could see the market really respected that pink level. Multiple times it went up and tested it. Daily closes below it. So at that time, I'm going, okay, great. This level, it's respecting. I'm now going to go to my shorter term charts to execute some trades based upon the reaction I'm seeing on the daily. Now, we got back down to 3006, the orange level, which it tested over the last couple of days. And it's been holding it, and we've been having closes above it. So I want to take you to what I've been looking at over the past couple of days. Now, let's pull up a 60-minute chart. Now, to me, I like to look at dailies for my bigger picture. I'm not trading off the dailies. Sometimes I will. In this volatile of an environment, I'm really not. I'm really looking at more at a 60-minute chart, and if it gets really volatile like we saw in March and April, I'll even go down to a 5-minute or a 1,000 tick. But lately, I've been really focused on a 60-minute chart. So let's talk about how the market's reacting to my levels. Now, actually, let me quickly go back and draw something on a daily. This is something that I do that I think is important. I think that will help everybody here when you're looking at it, get a better idea of what I'm looking at. So I'm going to take a horizontal line and I'm going to draw that right on my orange daily level. So this way we could see it on a 60-minute. So let's pull up the 60-minute again. And there we go. Now, here's our 60-minute chart. We talked about how the daily really sets the tone for me on the bigger picture. Now I need to be able to find a way to execute it. Because like I said, I really can't manage risk too volatile on a daily, too wide of levels. So I drew that horizontal line there. And I think that this will actually help you see that, okay, on the daily, we tested it multiple times. We're actually testing it here as we record on a Friday. And same philosophy through every time frame. It doesn't matter if it's a tick chart, a time chart. When Bollinger Bands are widening and we're going in one direction, like this way we were going down, to me, I don't want to be stepping in and buying until the Bollinger Bands start to contract, and then it'll draw my 30% line, which down here came in at 30.38. You can see that price. And now I want to see, is the market respecting my area? We look at the daily, that horizontal line I drew, 3006. It hit it, but it wasn't respecting my 60 minutes. So really, this is a no trade for me. I'm watching it. Hit the daily level. I'm not trading off the daily. I'm trading off my 60-minute. Now, this was really early in the morning. Wasn't really trading too actively at that point in time. This is around 6 a.m. Eastern. Multiple closes above and below it, really just chopping around it. That's not the market respecting my level. It's just saying your level really doesn't matter to us, Anthony. And I understand that and I accept that. But then I started to see as the market opened up, then we started to get multiple hourly closes. Remember, this is a 60-minute chart above it. And then at this point, the market started to respect my level. That tells me something. Now I saw that we tested 3006. We held it daily. Now our 3038 level wasn't getting much respect before. Now it's getting respect. What's my target? My next level, which is my orange, which is roughly 3080. And it went up there and tested it. At this point is when I started looking actively long the E-Mini S&P, because at that point, I'm saying you're now respecting my level. So when people ask me, well, what do you do if you have a level? Do you just go in? No, I say I wait for the market to tell me that what the reaction is. And if the reaction isn't good, I stay out. But when the reaction is good, now I have that focus. It held my level, held my daily level, held my 60-minute level. Now I just execute in that direction. And then you go up and then you watch how it tests your next level, which was 3080. Hit it, held below it. Hit it, held below it. Multiple hourly closes below it. So now I'm looking at it going, okay, I could start leaning short on this area and look for a retest of 3038, right? Now look what happened today. We go down to 3038, zips right through it, right? Initially, I'm going to wait to see how it trades. If it blows through it and then closes the hourly below it, what does that tell me? The market isn't respecting that area. So it really comes down to, for me, in these examples, especially when I'm looking at hourlies, watch it test, watch how the hourly closes. If you start to see it hold it and close above it or below it, depending if you're long or short, the market is reacting well to your area. This way, I'm not just jumping in at any level. Everybody's got levels. Everything works sometimes. Nothing works all the time. This is develop your edge, right? So for me, developing my edge, let the market tell me when it's respecting something that I have, that it likes, and it's reacting well to it. Then I just have that clear mind of just executing in that direction. And as we sit here now on Friday, what am I going to be watching? That 3006 level, that horizontal line that I drew. And to see if it starts to close that below that on a daily, then what do? I start to flip and look for shorts. So Bollinger Bands expand. I'm then going to look for resistance to sell as long as it stays below 3006. And if it gets above it, vice versa, I'll look for longs again. So that's really what I look at. And I want to take you to something else I mentioned that I wanted to show you, and that was HYG. I've been talking about this for the past couple of weeks, been putting tweets out on this, been talking about it on this show. HYG, let's go back to the daily. Okay, as you can see, I have my horizontal line in there. I talked about 8167. That's this red line, which is actually covering my orange line right now. And I said earlier in the show, I said, when S&P got below 3006, why didn't I get too bearish? Well, now my correlating market is holding above my support. That's very important to me. So that really indicated to me at that time, if you're using correlating markets, I've talked about compare apples to apples. If it's holding support in the leading market, which I think is HYG right now, then the S&P might be overshooting. So I did not get overly bearish the S&P when I had that daily close below 3006. It got closed back above it. We saw everything start to work together again. That's extremely important. Now, as you can see today, below 8167, we'll see where we close, but let's go to the 60-minute chart, okay? This is what was interesting to me this morning. When we started to blow through, when I showed you on the 60-minute chart in the E-Mini S&P, that 38 level, I looked at support in the 60-minute HYG. Remember, compare apples to apples. If they're both starting to break down together, look to see how they're reacting at support. Just melted through it. And it got below the daily. Really, to me, it's indicating that right now HYG is a little weak and really hard for me to want to step in and be long the S&P. I want to see the HYG close back above 8167. S&P closes above 3006. Then next week, when we open, I will look to see if there are going to be some long opportunities. If it closes below 8167 on a daily, if it closes below 3006 in the S&P, then I will start to look for shorts. Remember, it's about reactions. Let the market tell you what it wants to do. So that's how I use reactions to help me get an edge in my trading. Now, we're going to be back in 30 seconds with my final thoughts. Hang tight, traders.
24/7 access to diverse global markets. Right here.
That's why I added stock index futures to my trading strategy. Now when I see ups and downs coming, I'm ready.
Well played.
Why trade futures with Tradestation? You can trade over 80 products, from home, work, or on the go, with a powerful, easy-to-use interface and prices that let you focus on padding your wallet, not emptying it. Upgrade your trade at Tradestation.com.
All right, traders, final thoughts for today. Watch the reactions. Everything works sometimes, nothing works all the time. That's something I live by. Now, I want to take you to a tweet that I put out this week. A lot of times I'll put out tweets, obviously things that I'm thinking about, but things that I'm thinking about actually talking about in this week's show. And this week I wrote, some days we get perfect setups and we lose money. Other days we get one mediocre setup and it works perfectly. This is why I focus on reactions to my areas and less on the setup itself. The market doesn't know my strategy, so I let the market tell me if it respects my area. Watch the reactions. Really sums up what I talked about in today's show, and really sums up about my trading over the last many years, but specifically over the last couple of weeks. I don't care what level you have. The market doesn't know what you have. So it's so important to let the market prove to you through its reaction at your area if it wants to work or not. I think this is so important. Everybody has a level or an indication that they're looking at, and most of us are in a hurry to get in because, of course, we want to get in and we want to make money. But I've learned that getting in right away is not the best strategy for me. We always talk about it comes down to execution. And a big part of my execution is watching the reaction at my area and not being in a big hurry to be getting in, actually making me be forced to get in. Now, Karina asked me a question. I thought this was a great question. It says, do you wait for the first reaction to enter or just fade it on the first test? And hopefully I answer that today in my description of how I watch reactions and then execute. To me, it depends on what time frame I'm really looking at. Specifically, 60-minute is really my primary time frame. And it doesn't really matter if I'm even going to shorter term time frame, even if it's a 5-minute. I want to see the market hit an area, test it, and then close a bar after it. So it doesn't really matter if it's a tick chart or time chart. I want to watch an initial test, close above or below it, whether it's support or resistance, and that will be my indication that I work my way into the market. Next, another tweet I put out this week. I finally made money trading after years of losing and thought I made it. Wrong. It was harder to sustain my success because when I lost money doing the same thing that made me money, I was shaken by it. I struggled and gave a lot of money back, but it taught me a great lesson. Always adapt. And really, this fits so well into what I talked about today because I thought that I had the perfect strategy after years of struggling, going in, everything was working. At that moment in my career, I wasn't as focused as much on the reactions because I thought I had such a great winning strategy that, okay, this is just what's going to make me all the money I've ever wanted to make. And I was wrong about it. And I didn't adapt quick enough. Once I started to lose money, I was in a big hurry to get in at every level because I couldn't wait to trade and make it back. And all I did was lose more. And always adapt is obviously something we know as traders, and it's so important. And what I'm looking at in every environment is reactions. How is my strategy working in this environment? How is the market reacting to my strategy? Adapting is so important, and we're always adapting and we're always learning. Now, I want to take you over to this screen over here. I tweeted this morning about the Russell Recon, and you can find this link to what I'm looking at here right now on CME Group's site on one of their education pages about Russell Recon. Reconstitution Day is typically one of the highest trading volume days of the year in U.S. equity markets. Now, if you trade Russell futures like I do, you better know this. I always talk about knowing everything about the markets you're trading. A lot of us just get so fixated on the fundamentals and the charts that we forget that there's other things going on. Russell Recon is a huge day for Russell traders. Like I said, you can go and read more about this. I'll actually put this in the YouTube post down below, and you can go and check out my Twitter feed. And this link will take you to cmegroup.com on their education page, which has a lot of great info. Now, remember, traders, any questions or comments you have, please put them down below here in YouTube. And you can always follow me at Anthony Crudele, and ask me questions on some of the tweets I put out, like Karina did today, and we'll talk about them in the show. I've also been mentioning a lot about Instagram lately. You could follow me there at Anthony C. Crudele. I've been doing more stuff in my stories and just putting a lot more things on my Instagram page. Now, we're off next week. It's the 4th of July. Rest your mind, rest your body. I always like to take 3-day weekends and really just relax. Enjoy the time off, everybody. That's a wrap for today. See you in 2 weeks.